This might be the most important video you'll see this year if you care about where the future of DeFi and on-chain trading is heading. I will not talk about some random meme coin or a hyped crypto coin. I'm talking about a project that is quietly creating the backbone of what many people believe could be the Wall Street of crypto. And that project is, drumroll, Hyperliquid. Now, before I dive into everything, a quick reminder. I'm not a financial advisor, obviously. Nothing I share is financial advice. I'm just giving you my personal research and opinions. Always do your own due diligence before you invest in any project. And if you're enjoying this type of deep research, make sure to hit the like button and subscribe to the channel so you don't miss my future videos. Alright, let's get into it. So what exactly is Hyperliquid? Well, it's a decentralized exchange that runs on its own custom blockchain. Unlike most DEXs that really rely on Ethereum or another general purpose chain, Hyperliquid built everything from the ground up to handle trading at scale. The base layer is called Hypercore, and it acts like a high-speed execution engine. On top of that sits HyperEVM, which is fully compatible with Ethereum smart contracts but optimized for financial use cases. And then you've got Hyperbridge, which connects Hyperliquid with other blockchains and traditional finance rails. Now, here's where it gets really interesting. Hyperliquid doesn't use automated market makers like Uniswap. Instead, it uses a fully on-chain central limit order book, or CLOB. That's the same system professional traders on centralized exchanges are used to. And somehow, they've managed to make it run with sub 100 millisecond latency and throughput in the hundreds of thousands of orders per second. Wow. When you compare that to Ethereum mainnet, which struggles to handle even a few dozen transactions per second, you start to understand just how different this thing is. Hyperliquid feels less like a DeFi experiment and more like a professional trading venue that happens to live entirely on-chain. Next, let's talk about the fuel behind this machine, the Hype token. The token supply is capped at 1 billion units and it's distributed across several buckets: community incentives, the foundation treasury, builders, and liquidity mining. Now, let me also mention something huge that a lot of early users will never forget: the big Hyperliquid airdrop, officially called the Genesis event. It happened on November 29, 2024, and it was absolutely massive. In total, 310 million Hype tokens, that's 31% of the total 1 billion supply, were distributed to almost 94,000 early users. It became one of the biggest wealth generation moments in DeFi history. Some people literally woke up with 7-figure and even 8-figure portfolios overnight. Also, around 420 million Hype tokens are still sitting unclaimed in the community rewards wallet. Those tokens are reserved for future emissions, incentives, and the much anticipated Season 2 airdrop that everyone's already talking about. I actually made a separate video that covers all about Hyperliquid airdrops in detail. So once you finish this one, go ahead and check it out on the channel. Now, one of the most interesting mechanics is something called bHype, which is staked hype. When you stake your tokens, you get voting power in the governance and a share of exchange revenues. In the first half of 2025 alone, Hyperliquid generated more on-chain revenue than Ethereum itself, which is insane when you think about it. Holders who locked their Hype were able to capture a portion of that cash flow. Now, let me add this. Hyperliquid also introduced usdH, its own native stablecoin, launched in partnership with native markets. Unlike most stablecoins, usdH actually distributes yields from underlying reserves back to holders. Imagine a stablecoin that pays you interest just for holding it. That's exactly the kind of innovation that can attract billions of dollars in liquidity if it scales properly. So, when people say Hype is more than just a governance token, they're right. It's tied into the core economic engine of the platform. Let's shift to another feature that really sets Hyperliquid apart, and that's the builder code system. Think of it as referral codes. But instead of just giving kickbacks, they act like a micro ecosystem for developers and influencers. If I create a builder code and people trade through it, I get a portion of the fees and I can redistribute that to my community however I want. And then there's HIP3, one of the most talked about governance proposals this year. HIP3 introduced risk-drenching markets, allowing users to bet on new event-driven perpetuals like elections, sport, or macro outcomes. It basically opened the door for an entirely new category of prediction markets inside Hyperliquid. And I think this is one of the smartest moves they could have made. Because right now, most of DeFi is copy-pasting the same AMM formula. Hyperliquid is showing that you can actually expand the design space and bring markets that have never existed on-chain before. Now let's walk through some of the major events and developments this year. 2025 has been absolutely packed. In March, they rolled out the usdH stablecoin I just mentioned. It wasn't about launching a token. It came after a heated governance war where different issuers competed to win the mandate. Eventually, native markets was chosen. And that was a turning point because it showed the community actually had real power over how the system evolves. Then in September, Hyperliquid held a huge hackathon in Seoul with over 13 projects launching, from AI-driven trading bots to new copy trading protocols. That signaled a shift. Hyperliquid is no longer just a derivatives venue. It's becoming an application ecosystem, and you can't ignore the numbers. Daily trading volumes have regularly been in the billions of dollars, open interest in the tens of billions, and fees generated in the hundreds of millions just in one quarter. These are not DeFi scale numbers anymore. They're competing head-to-head with centralized exchanges. Alright, but it hasn't all been smooth sailing. Hyperliquid has faced some serious challenges in the security department. Back in March, there was the infamous Jelly attack, where the liquidation system was exploited. It wasn't a catastrophic loss, but it exposed weaknesses in how positions were auto-delivered. The team responded quickly, patched the system and rolled out new risk modules, but it was a wake-up call. Fast forward to September and things got more dramatic. A protocol called Hyperdrive, which was built on top of Hyperliquid, got hacked for almost $800,000. The exploit came from a smart contract bug that allowed attackers to drain liquidity pools. And then there was the Hyper NFT theft, where around $400,000 worth of NFTs were stolen. It highlighted that even if the core exchange is solid, the surrounding ecosystem still carries risks. Critics also point out that Hyperliquid relies heavily on a small core team and governance, while active can still feel centralized compared to Ethereum or Cosmos. There's also the fact that some of the early HyperEVM projects look like forks of existing DeFi apps, raising questions about originality in the ecosystem. So, while the performance metrics are off the charts, the security incidents and centralization critiques remind us that this is still an experiment with real risks. How does Hyperliquid stack up against its competitors? The most obvious comparison is with Aster DEX, another rising star in 2025. Aster focuses on modular execution and cross-chain liquidity. It's fast and scalable, but it hasn't reached the same adoption curve as Hyperliquid yet. If you want a detailed breakdown of Aster versus Hyperliquid, I actually made a separate video on the channel where I go into this in way more detail. So go ahead and check that out after this one if you want the full head-to-head. Then you've got older players like DYDX and GMX. DYDX moved to Cosmos and is still respected, but its order flow can't match Hyperliquid's numbers. GMX relies on a GLP pool model, which is innovative but less capital efficient. Honestly, the only real competition Hyperliquid has right now is centralized exchanges like Binance, Bybit, or OKX. And that's exactly the point. Hyperliquid isn't trying to beat other DEXs, it's trying to replace sexes. So, where does this all go from here? If Hyperliquid continues at its current pace, I see it becoming the dominant on-chain derivatives platform by 2026. The combination of the usdH stablecoin, the builder ecosystem, and the ongoing governance experiment make it extremely sticky for traders and developers. And now let's talk about the elephant in the room, the HYPE token price. At the time I'm recording this, HYPE trades in the mid-40s range. Analysts are watching the $55 to $60 zone as the next breakout level. If Hyperliquid can sustain its revenue growth and successfully roll out more unique markets under HIP 3 and HIP 4, I personally believe a move toward triple digits is realistic within the next 12 to 18 months. That said, it all comes down to execution. One major hack or regulatory crackdown could derail the momentum, but with Paxos backing usdH and Hyperliquid engaging directly with the CFTC about 24/7 perpetual trading, I think they're playing the long game. For me, Hyperliquid is more than just another DeFi project. It's a bet on whether we can rebuild global financial markets entirely on-chain, and that's why I'm watching it so closely. So, what do you think? Is Hyperliquid the future of DeFi, or is it just another overhyped experiment? Drop your thoughts in the comments below. I'd love to hear what you think. And once again, don't forget to like the video, hit that subscribe button, and share this with a friend who needs to understand where the next big wave in crypto might come from. Thanks for watching, and I'll see you in the next one.